Hello traders, Gary Wagner here. Approximately 12:35 in Honolulu, 5:35 in New York on Tuesday, 4th day of January 2022, and this is the Daily Report for gold and silver. After yesterday's dramatic double-digit decline, gold absolutely recovered, opening at roughly the closing price of yesterday, trading to approximately the same low, and then trading up by $14.80. Currently, we have the February contract fixed at $1,814.90. GLD, which is another gold item that we are currently trading, gained $1.24 per share and is currently fixed at $169.57 per share. We had some risk aversion today, especially in the NASDAQ Composite, which lost 210 points or 1.33%. The S&P had a fractional decline, and the Dow Jones Industrial gained 0.59%. We had strong gains in the precious metals across the board, with palladium leading the way, up 2.68%. Then platinum gaining 1.91%. Silver gained 1.23%, a total of 28 cents, putting the March futures contract at $23.09. This first chart that we are looking at is a long-term daily candlestick chart. We'll compress it in a second, but I wanted you to see what this lower level support line, the two lows that it was fixed upon, because they occurred last year, one in mid-August right here, the other one at the end of September. When we carry it forward, it has given us some valuable information because it does serve quite eloquently as a support line and shows us where we believe that gold should not break below to maintain itself in its current bullish composure. There are two things that I believe are extremely noteworthy when we view this chart on a technical basis. The first thing is the last 2 days contain lows that were above this particular support line. It broke slightly into the area of 1800. This is that light dashed line, but it closed just above 1800 yesterday and opened just above 1800. So we basically had matching lows and a close and open that matched according to these candlestick charts. The other thing I find very interesting is not so much the high that it achieved today, but rather the close, because we have identified a first level of resistance coming in at approximately $1,815. It is not Fibonacci based. It is based on a series of tops that we identified that have come in right about this price point and then found resistance. I believe this to be a fairly minor level, but it has served as resistance in the past. If we are to see gold continue to run to higher ground, the real next target that we have has to occur at $1,833.50, and that, of course, is the 38% Fibonacci retracement. Yesterday, we did enter a long trade in February gold. We got in just above 1800 at 1801. That's right here, but it's certainly near the bottom of the trading range. We placed our stop just below the 78% retracement area to account for any volatility, but we'll look to move that up as quickly as we can. I want to see one more up day, so to speak, and we have just opened overseas. That's what this small dashed line here is, and gold is currently at $1,815.10. In terms of the area that I would look to move the stop up to, it would be between 1805 and 1810. We would certainly send out a special trade alert, but for right now, maintain your current long position in GLD and gold and futures and Forex. We're looking at a three-line break chart, and what we can derive from this is we were definitely looking at a negative bias the other day, but as you can see with this small blue line, we've gone into a positive or bullish projection. Lastly, a look at silver futures. This bases the most active March contract. The pattern itself, this two-day pattern, would be called a bullish harami, except that a bullish harami occurs after a defined downtrend. Then you get a long red candle, and then an inside trading day in terms of a Western analysis. The word harami simply means pregnant in Japanese, and you would go ahead and buy it. Of the two-day reversal patterns and candlestick patterns, this is the weakest among them, the strongest being an engulfing bullish or a piercing line. Right now, we still see resistance at $23.50, and we see support at right around $23. I would need further confirmation of a move at least to $23.25 before we would consider adding a long position in silver to our current trades. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.